Alrighty, guys. So the markets are not looking good right now. It's about what? About 2:10 p.m. on the East Coast, and we have all of the indexes down. We have the Nasdaq 100 down 0.8%. We have the Russell down about 1%. The S&P is down 1.1%, and the Dow is getting slaughtered again, down the most, which is not usually the case, but today it is down 1.3% as the VIX is up almost 4%. Now the VIX is over 20 when a couple days ago it was at 18. Maybe yesterday it was at 18. When was it at 18? Recently. I mean, it was just at, 1801. Now we're back over 20 on the VIX. So in this video, we're, of course, going to break down the markets. We're going to talk about Microsoft, which just announced they are cutting 10,000 more jobs. And on top of that, we're going to talk about David Rubinstein, what he just said. So if you guys find value, hit that like button. Make sure to subscribe and get your up to 15 stocks from Moomoo and up to 12 fractional shares from Webull. All those free stocks, free money are linked down below. And with that being said, guys, let's dive into the video. So, Microsoft. Let's just dive right into the news. Microsoft just announced they're laying off 10,000 people, which is roughly, I think, 4% of their workforce. Correct me if I'm wrong. 4.5%. So, 4.5% of Microsoft's 221,000 total employees are getting laid off, right? And the cuts are expected to be completed by Microsoft's fiscal Q3, which ends March 31st. Microsoft said the layoffs will result in a $1.2 billion charge, representing minus 12 cents per share. And they previously announced, according to Axios, back in December, that they're shedding as many as 1,000 jobs. So this is not their first layoff. And I mean, I guess it's their first major layoff. 1,000 jobs back in October really isn't that many for a 221,000 employee company. But now 10,000, that's a little, I mean, that's 10 times more than 1,000. I mean, it's a decent chunk. And in July, Microsoft laid off approximately 1% of its workforce. So we're going back to July now. And in May, the company announced that they were slowing down hiring in their Windows, Microsoft, or Office rather, and Teams divisions, guys. And according to Satya Nadella, the CEO of Microsoft, as we saw, this is a quote, as we saw customers accelerate their digital spend during the pandemic, which is obvious, we're now seeing them optimize their digital spend to do more with less. So they're pretty much, cutting out things they don't need. Makes a lot of sense, right? And again, that's according to Satya Nadella. And according to Satya Nadella, they're also going to be continuously hiring in strategic areas of the business. So let's say maybe PCs not doing as well. They're going to be cutting from PCs. PCs maybe focusing on, a segment of the business that's growing and that obviously requires more employees. Of course, everybody's now chasing, and they've been chasing AI. That's the big thing, and that's where money is going to be going as a longer-term play. And that's what I'm assuming Microsoft is going to be hiring more people in, maybe in that area, maybe in other areas. So, at this point in time, guys, if we look at this, the stock, it is down a little bit, 1.1%, which is pretty much right in line with what the S&P 500 is down. So not anything crazy in Microsoft stock. If we look here on the intraday chart, let's pull it up and see how the day has been going. We were up over $244, roughly at $244 earlier in the day. That was in the pre-market. And now we're down about 2.5 to 2.75% from that point. In other words, about $6-7. So Microsoft at one point it was actually up. It was up 1.5% in the pre-market at its high. Now it's down 1.2%. And even though 1,000 people or 10,000 people are now going to lose their jobs, that sucks. From a business perspective, they're trimming the fat. Like I said, they're saving on a certain segment of the business, and now they're going to put that money somewhere else. Maybe they're going to save that money. Do whatever with it. Microsoft is great, clearly, at investing in itself, investing in the business to grow the business. It's obvious. I mean, that's how it's gotten this big in the first place. So they're going to do good with the money. We'll see how it goes. But right now it is down 1.2%. The whole market is down, and really there's only a couple stocks that are green on my watch list, guys. Some of those are Las Vegas Sands, Tencent, Macy's, Smith & Wesson, Applied Materials. Other than those 4 or 5 stocks, we're all in the red today. And Tesla is also, as you guys can imagine, taking a bit of a beating right now. It's giving back a lot of those gains from yesterday. And if you guys take a look here in the pre-market, holy crap. Excuse me. Holy crap, guys. I'm freaking choking. I don't even know why. There we go. Cheers, by the way. Make sure to drink your water. Stay hydrated, as always. Tesla in the pre-market was over $137. Oh, my goodness. So at one point, and you guys probably remember, yesterday was a pretty good green day. At one point, we were up another 4.5% in the pre-market. And then once the markets opened, just like that, I mean, this thing started getting destroyed. And it's still getting destroyed as I'm making this video. I mean, it's still in a downtrend on the intraday chart. Does not look like it wants to reverse by any stretch of the imagination. So, yeah, Tesla's now down from, pre-market highs, about $10, over 7%. Pretty wild swing there for Tesla. And we'll see what it does here. We're actually approaching a big point. If we pull up this chart, guys, the 4-hour, look at what Tesla's doing right now. We're now getting pretty much, getting close to those highs from the end of December throughout pretty much the entire month up until yesterday, which were right around, those highs were right around 124.25. Now we're getting back to that point. Let's see if we do end up holding this point as support, maybe bouncing off and running back towards that 137 high. Let's see if it does end up happening, or if we do break, let's say under 125, that could trigger more selling. We shall see here, what goes on with Tesla, guys. So let's talk a little bit about David Rubinstein, which you guys probably know. He's the co-founder and co-chairman of the private equity firm, the Carlyle Group. You guys probably heard of that. He's a billionaire, multi-billionaire. I don't know exactly what his net worth is, but he's in the news today because he thinks the Fed will probably target inflation down to about 3% and not their goal 2%, which you guys, if you've watched any of the Fed, meetings, the press conferences, the videos with Jerome Powell, he always says their target is 2%. And, in other words, David Rubinstein saying, there's no way we're getting to 2%. That's too ambitious of a goal considering the inflation that we have right now. And it was at almost 10%, or was it over 10% at one point? I'm losing track, guys. Now it's at 6.5%. He's pretty much saying there's no shot it's getting to 2%. They might have to, and by they, the Fed, they might have to settle for 3%, which makes sense. I mean, the Fed funds rate right now is 4.25%, 4.5%, roughly in that ballpark. We're pricing in probably another couple rate hikes to what, 5.5% or 5.25% is what's priced in, right? Roughly, is that going to bring down 6.5%? Probably not. I mean, we're going to have to see it come up even more. And is the Fed really willing to raise rates even higher, towards 6, towards 7? I mean, I don't know. I don't know if they're willing to crank it up that much, because there's a fine line here. We've talked about this. If they raise rates too much, markets could get really ugly. If they cut the rates, more inflation, and we're going to run way past that 3. I mean, we're already way past the 3%, but if they cut rates here, guys, it's going to get way past 3%. I mean, right now we're at 6.5%, 3%. That's I'd argue that's a reasonable target. I mean, over time, 2%. You could argue is reasonable if we're looking even farther out with more time. Maybe we can get the 2% again. But 3% in the shorter term, I guess, is reasonable. So, yeah, I agree with David Rubinstein there. Is Jerome Powell, though, going to come out and be like, yeah, our new target's 3%? Of course not. I mean, of course he's not going to do that. But, it's probably going to end up being the new baseline. And maybe in a couple years they change that from 2 to 3%. I don't know. We shall see, guys. But yeah, David Rubinstein, co-founder Carlyle Group, very, very, very wealthy man here. He's one of the top investors out there, guys. That's what he's thinking. And we have to share that on the video, which is what we just did. And if we look here quickly at big tech, guys, big tech is holding up decent. Apple's actually at break even right now. Amazon, if I pull it up, is also at break even. We have, what's the other one? Meta. Let's pull that up. Meta. This was down 1.5%. And you guys can see Meta is starting to get rejected at 138. Keep that in mind. That's resistance from back in October, middle end of October. So Meta's getting hit. Google, I really want Google to get under $90, man. Under preferably $80. Hopefully, it's down barely. It's also at break even, but hopefully one day here in the short term, we do get under that 90 or 80 rather, so I could buy some more Google. And we have Microsoft now. Yeah, we talked about that already. Down 1.2%. So, yeah, I'm going to wrap the video up here, guys. No need to talk anymore. We got all of the topics out on the video. Hope you guys enjoyed it. If you did, hit that like button. Make sure to subscribe to this channel and my second channel, Stocks Talks Money. And don't forget to get up to 15 stocks from Moomoo and up to 12 stocks from Webull. All those links down below. All the details are linked down below. And just know, guys, all those links down below help out the channel. And with that being said, cheers. I'll catch you in the next video. Peace out.